And again, welcome today to our panel on understanding alternative investments and hedge funds. So my name's Anika Rao. I'm an associate at the Alternative Investment Management Association. So that's a global trade association representing the interests of hedge fund and private credit managers. And I'm joined by some exciting individuals who work within the hedge fund industry. I don't know if you want to give a wave. We've got Alex Hu. Hi there, Elena Elzinga, Jasmine, and Jasmine Yo. And yeah, so like Vicky was saying, today we'll be diving into the industry, covering some of the various roles in the industry, entry routes, and a lot of things in between. So if you do have any questions, do feel free to share these in the Q&A box. We'll try to pick them up as we go, but if not, we'll try to address these at the end of the session. But I guess to kick things off, first of all, we need to understand what a hedge fund is. So in short, a hedge fund is a type of investment fund, and it's used to invest non-traditional or alternative investments like commodities, rare art, even kind of IP rights, wine, or so on. And it pulls money from different institutional investors. So you might have heard of retail investors, people like you and me, but institutional investors, they invest for kind of an organization instead of for their personal accounts. So what distinguishes hedge funds? Well, their aim is to maximize investor returns, eliminate risk, but no matter the economic or market environment. And so they tend to kind of one of their benefits is that they provide that greater protection against the losses that traditional asset classes like stocks and bonds sometimes experience. And like I said, there are some specific characteristics that hedge funds have that kind of distinguishes them from other pooled investment vehicles. So one being their use of sophisticated investment techniques. So they're usually quite highly diversified, and they hold relatively kind of concentrated short positions. Another point is their limited availability to investors. So they're usually only available to what's called kind of qualified investors. So these are investors that meet a certain kind of financial and knowledge threshold. Other characteristics we have, they often have agreements with investors that allow them to only withdraw funds at kind of certain dates, so pre-agreed dates. So that's kind of a time when the hedge fund manager believes they would have kind of implemented their various strategies successfully and realized the expected returns by that date. They have a certain compensation model, so they have an annual management fee and a performance fee. And that fee, the performance fee, is only earned if the fund reaches kind of the highest point in its past. And then last but not least, one other characteristic is the hedge fund manager usually invests a lot of their own capital into the fund. So kind of having this skin in the game, which is what they call it, that's kind of a powerful incentive to maximize profits. But yeah, so that's the kind of overview of the theory of hedge funds, but I guess we'll move all that boring stuff aside and actually get on with talking to these individuals. So what does the hedge fund industry look like in practice? What does it actually mean to work in the alternative investment industry? So starting maybe with Jasmine, you're an investment manager. What does this entail? What do you do day to day?
Sure. So I work at a company called Ruffer. So we are an alternative investment manager. So we share quite a lot of the characteristics that you just described, not all of them, but a lot of them. So things like we use complex asset classes or investment instruments to help protect our clients' capital in difficult market environments, for example. So as you said, I'm an investment manager there. I actually co-manage one of our funds called the Ruffer Investment Company. I also look after some direct client portfolios too. So there's really a mixture of kind of two key elements to my job. I would say there's kind of the investment piece, which is really managing money. So inputting into our investment process, making decisions around what we're going to invest in, sort of when and why, really helping our investment team to formulate a view of the market environment and the economy. And then there's also the kind of more practical element of managing the money, which is actually placing the trades to make those investments, managing the liquidity, the currencies within portfolios. And then sort of the second key part of my job is really around communication. So speaking to our investors or potential investors, what other areas of the market about our investment strategy, providing them with sort of updates, our latest thinking, maybe our outlook, performance updates, how the strategy has performed, which is pretty interesting when you're looking at a year like last year, which was really volatile in investment markets. And then some other more interesting, quite fun things like speaking to journalists, doing podcasts, sort of writing thought pieces. So pretty varied on like the comms side as well. On a day to day, it really varies. It can be more investment focused. I might be doing a lot of reading or talking to our research team, thinking about the portfolio, about maybe any changes we might want to make. Or if it's a more sort of client or investor communications heavy day, I might be out and about at client meetings, presenting at an event. Just today, for example, I was in Guernsey in the Channel Islands, speaking to the board of the Ruffer Investment Company, because the investment vehicle is structured as a company. It's a FTSE 250 listed vehicle. So I was presenting an update to the board of directors of the company. So it's kind of lots of variety, which is what makes it fun, but really day to day is investment and communication.
Thank you. It seems like, I mean, do you get to work with many people within your roles? So many of the other kind of other roles within the firm. Can you name some of them, like maybe compliance and so on? How does this all kind of fit together?
Yeah, sure. So definitely lots and lots of interaction with various people across the business. I kind of mentioned one particular area, which is our research department. So at Ruffer, we have an in-house research team. So analysts focused on helping us kind of formulate our macro investment view. So what's going on big picture in the world and the economy, and what do we think that impact that's going to have on financial markets. We'll also have more micro focused analysts. So these will be individuals looking at specific securities or investments like companies, and sort of picking, companies that they think are really interesting and attractive as investment opportunities. There's also then lots and lots of interaction too with sort of more operational roles within the business. So our settlements team, these are the people who do the back end of our trades, our marketing team around events and that kind of communication piece that I spoke about, and also a lot of work with our sales and distribution team. So they're the people that might sort of own the relationships with our investors, and I'll go along with meetings with their contacts to talk about the fund.
Great. Alex, is this quite similar to your role? Can you tell us a little bit about your role and who you work with?
Hi, good evening all. So I am Alex Hu. I am responsible for due diligence and fund selection within JP Morgan Private Bank. And actually, it's quite interesting to hear what Jasmine says, because I'm really on the other side of that to some extent. We, as a team, and myself particularly, my role is to try to understand what asset managers and portfolio managers do, for example, such as Jasmine and her team. And our role is to understand what they do, but also to select them in order to propose them to the clients. To our clients within the JP Morgan Private Bank. And so in order to do that, what we need to understand is really what is driving the investment case, the investment philosophy behind each manager, where their edge lies and how they put it into action in the markets, in a sense. And based on that, we then try to assess them both quantitatively, so running numbers, running, I don't know, if you're studying maths, for example, like a simple regression, for example, would be a very basic type of analysis, but really trying to understand how how they are able to generate strong portfolio performance, but also able to comply, or at least to have the characteristics that you describe, Anika, for hedge fund in general. And then really it's about keeping in touch with these hedge funds to try to understand what they do on a regular basis once our clients are invested in them. And if maybe, let's say, one hedge fund is deviating from its investment style, or maybe we have concern, then we'll recommend our clients to exit the hedge fund.
And so what does that look like day to day? Kind of, for example, as much as you can detail, you kind of woke up today, what were you involved in?
Yeah, for example, day to day. So this morning, if I pull up my agenda, what you'll see is that in the morning I met up with two portfolio managers from different fund houses or different hedge funds, trying to understand how they performed recently. And one of them is one which we have already a strong partnership with. So our clients already have assets there. And the other one is really we're at the due diligence phase. So we're trying to understand what they do, how they do it, and if they do it well.
Great, thank you. Elena, what is the Wellcome Trust? What do you do there?
Sure. Hi, everyone. I'm Elena Elzinger. I'm a principal in the investment team at the Wellcome Trust. And the Wellcome Trust exists as a charity which exists to fund extraordinary improvements in human health. So we've committed to giving away £16 billion over the next 10 years to fund discovery research, to fund research into infectious disease, research into mental health, and into the intersection between climate and health. So very important causes such as potential cure for TB. That all involves a lot of science, which is not my area of expertise. My role is to contribute to the management of the roughly £38 billion endowment, which exists to support that mission and hopefully continue to do that in perpetuity. Unlike Alex and Jasmine, we don't have any clients. We received one gift in 1936, which was the basis of the endowment as it stands today. So I don't have any client-facing role. But instead, I'm part of the team making decisions on the composition of that portfolio and manager selection within it. So we have various different assets. We have public equities, which we invest in both directly and into long-only fund managers. So those are not hedge funds. Those are ones that will only buy stocks. They don't have the ability to short stocks or use other complex instruments. We invest into property, we invest into venture capital, into buyout firms, and into hedge funds. So I oversee the hedge fund portion of our portfolio, which is about 10% of our total capital. I also oversee our work on climate change, but that's a slightly different topic. The hedge fund portfolio is a combination of different strategies, but most of them are in our portfolio because they are designed to deliver relatively consistent returns in all environments. So unlike public equities or particularly venture capital, which is going to have a more volatile time, but over a long-term cycle, we believe will deliver strong returns, hedge funds we'd expect to be a bit more consistent in their delivery and not correlated with equity markets, so low equity market beta. We'd also expect, for some of them, we want a certain degree of liquidity. So we have an ability to withdraw capital relatively quickly to fund our mission. Or if we see greater opportunities in public markets, we might want to take some capital from absolute return, which is hopefully protected capital and grown capital in a downturn, to potentially fund investments into public equities.
Oh, sorry, were you about to?
No, you go. I can answer the question on day to day.
I was going to jump in. I probably should have jumped in a bit earlier. Are you able to clarify what an endowment fund is, just in case any of our audience aren't aware?
Yeah, sure, absolutely. So an endowment is a charity that has been given a gift or has collected a series of donations or gifts and is managed for the benefit of the trust that it supports. So as we are part of a broader group, and I see there's a question on kind of the distinction between asset managers and investment managers, but there are asset managers and then there are asset owners who actually obviously own the assets, and within that broader category sits endowments, foundations, pensions, insurance companies, and sovereign wealth funds as a non-exhaustive list.
Great, thank you. And yeah, to your point, I think until maybe the mid 2000s, hedge funds, alternative investments, I think they're mostly kind of for the wealthy or so on. But today, a lot more capital and way more capital is invested in hedge funds on behalf of people like school teachers, nurses, doctors, and so on. Which I guess when you think of hedge funds, you maybe wouldn't realize that straight away, or that I've got a stat here, 3 in every 4 US dollars is done so by investors such as pension funds, public sector and corporate, and like you were saying, endowment funds, charities, and so on. So it's kind of interesting to see that development. Alex, how can you provide anything further on how the hedge fund industry kind of relates to the real world? We kind of think of it as maybe in the city and kind of distant to the everyday person, but what does it actually mean for you and I?
Definitely. I mean, I'll try to provide an answer, but if Jasmine or Elena, if you have anything to add, feel free to jump in. I would say hedge funds in general are asset managers. In a way, they manage money on behalf of clients. So clients entrust them with their assets. And I say one way where it relates to the real world is really some of these clients are endowments and foundations. I mean, Elena just touched on the Wellcome Trust, but you could also have pension plans, for example. A few pension funds are very heavy hedge fund allocators, especially in the US or in Canada, typically. And also in the end, you have entrepreneurs. So in the private bank here, we manage money or we advise clients, which are smaller endowments, smaller foundations, and also entrepreneurs, who've made money by selling interesting items or within the tech space. And so this is how they sometimes entrust us with assets in which we place in hedge funds, and maybe just for a shorter time period before they take that money back and then reinvest it in another company, in another venture project. Go ahead, Jasmine.
Sure. So I guess the way we interact with the real world is primarily through who our clients are and who invest with us. We're providing lots of people with an investment solution. So endowments is certainly an element of our client base, like the Wellcome Trust. Also private individuals. So that's actually how Ruffer started, was as a private client business, so looking after high net worth individuals' assets. As we've grown, we've come to look after a much broader client base. So say charities, pension funds, sovereign wealth, family offices, and actually as well other wealth managers in the industry. So other people who are putting together investment solutions will use the Ruffer strategy sort of as part of that. And I guess the other way we interact more with different parts of the financial industry is with, if that's an example of who our clients are, it's who kind of serve us, so who are we clients of? And that's people like kind of on a practical basis in terms of running the portfolio, investment banks and their trading desks is who we'll face off with in the market, other brokers, fund services. So Link provides some of our funds. And then I guess other elements of the industry for research or inputs into our investment process, or sounding boards, arguably, for our investment thinking.
Great, thank you. And you mentioned family offices there. Are you able to provide a little bit more information about what a family office is?
Yeah, sure. So if you ever try and Google and go on the office of a family office website, they usually give the least information of all parts of the industry that I've ever come across. So they're pretty mysterious. Not sure I fully understand them, but in essence, kind of in the most historic or traditional sense, it's where you have a very wealthy family who sort of want their assets to be managed collectively, sort of as a family. You also tend to get sort of more commonly now multi-family offices, so maybe where a couple of wealthy families will pool their assets and therefore sort of the resource to then manage and look after that wealth sort of across generations. So I guess something distinctive about a family office is they can often have very, very long time horizons. There may be sort of other elements to the office, not just investment, but sort of more broadly around wealth and tax planning. In a way, they're sort of almost very small, quite private wealth managers.
Great, thank you. And yeah, like you were saying, so family offices, are tending more now to kind of invest into assets more directly. because this allows them to kind of build an investment portfolio around their own time scale and needs. And they're quite an important source of investment capital for hedge funds. And actually some hedge fund managers also morph into family offices when they no longer manage third-party funds. So yeah, definitely one that does take a lot of Googling to find information on. Alex, I can see you've unmuted yourself.
No, I just wanted to say, I know we've got a few questions. I don't know if you want to answer them now or at the end. I saw six had popped up.
Let me just have a look.
We can answer them. I know one, as you look at Elena, I think someone was interesting to hear your day-to-day.
Oh, yeah. Yeah, sure. I can quickly comment on that. So it's extremely varied given we're a multi-assets portfolio. And we're actually participate in conversations on every asset class. So today we had a long investment committee with the whole team discussing two of our venture capital managers and one of our listed stocks that we own directly, which is HDFC Bank. And we will read the papers. We're all expected to commit our views on whether we should invest in them or not. And then the CIO makes his own decision, which doesn't have to be going with the kind of vote of the room, but he's always informed by that. More broadly, where it relates to hedge funds, it's a lot of speaking to our existing managers to understand what opportunities they're seeing, to meet. They're often quite large organizations, so it's very valuable to us to speak to different new people who've joined, understand why they've joined, to understand where the risks they're seeing in the portfolio are. Often we'll be taking their macro insights and sharing them with our in-house team. So it's great. Those conversations are great because you have such a varied conversation, and you speak to super bright, intelligent people. And the conversation can really range from anything such as your view on kind of the Bank of Japan and their likely future moves and how you might express that, to how are you thinking about kind of your risk in commodities on any given day or any given period, to discussing specific stocks that they might be long or short. So short being betting that it's going to go down in value. And then there's a bit of numerical analysis that will inform our decision, and meeting with potential hedge fund investments as well. We have quite a concentrated portfolio, and we are a bit constrained in that because we are large, we have to take several $100 million positions to make it count, given our lean investment team. But there are other asset owners, such as pension plans, which will have also very big asset bases, but dedicated teams that might seed new hedge fund managers. And that's quite a different skill set and a different degree of risk, because they typically take economics and the business growth as well.
Great, thank you for that. And thanks, Alex, for flagging. We do have some questions around investment strategies in particular. So I don't know, Jasmine, Alex, are you able to share more on kind of common investment strategies, things like absolute return, things like that? What does this all mean? And how has this changed maybe since COVID or during COVID?
All right. So I would say in terms, let me just look at some of the questions there. I would just answer briefly on the first one, which is, given the limitations to building leverage over the past year, have hedge funds changed their investment style and how? So I'm not sure I would agree with everything in that question. I would say a lot of the managers haven't really changed their investment style, and they've been, or the way they use leverage over the past year or years, plural. I think what has changed more recently is really, if you followed with Archegos, it was really excess leverage in a few concentrated names. And there, I think it's becoming much more restricted. But I think for a lot of investors who allocate into hedge funds, this is not necessarily a strategy they want to invest in, because there's excessive risk, excessive concentration. And in fact, if you think about Archegos, it was not a hedge. I mean, it was a hedge fund, but it was really managing Bill Huang. So the portfolio managers at the time owned money. And so it wasn't even open for investors. And then I think this is more for Jasmine, potentially on what are the skill set to break into a hedge fund.
Sure. I feel like we might be moving on to that in a second, but I'll kind of answer the first question that you mentioned, Aniqua, around different types of investment strategy. So one example, I guess, or one area that hedge funds can often be categorized into is sort of global macro. You might have heard the phrase when coming across hedge funds. So I guess, I mean, rough is a bit of a funny one. We sort of tend to straddle lots of different boxes in the industry. But we, in many ways, do operate a global macro strategy. So we're very top down in our thinking. We think asset allocation is sort of the key driver of our returns. So kind of what I said at the start, formulating a view of the economy and markets and positioning the portfolio to benefit and to protect from the risks and opportunities that we see sort of on a big picture kind of basis. We're also unconstrained, which means, and that is quite distinct of a lot of hedge funds and really what differentiates this part of the investment industry, perhaps relative to more conventional managers. As we said at the start, we can essentially go anywhere, own anything, any asset class or investment we would like to make that we think will help achieve our objectives. And the objectives that we have are capital preservation and steady growth in all market conditions. And that is quite distinct of an absolute return strategy. So it's sort of a global macro absolute return strategy. The absolute, what does that mean? Why is it called that? Because again, a lot of the industry, the conventional approach is to benchmark your performance. So really what the investment manager is trying to do is outperform an index or some sort of measure within the industry. If your goals are absolute, it means you're trying to achieve them regardless. You're not using a reference point. So we don't say we're going to outperform anything. We say we're going to preserve capital and steadily grow regardless of what's going on in the investment landscape.
Great, thank you. I can see a comment here or a question asking if hedge funds have more risk than other funds. So it is a common perception that hedge funds are risky, volatile. But to Elena's point that she mentioned earlier, kind of inserting hedge funds into a diversified investment portfolio can actually improve its risk return profile. So charities and endowment funds, pension funds, they invest in hedge funds because they are actually less risky than things like stocks and so on. They offer those steadier returns with the lower volatility and tend to perform better than most asset classes during various crises and crashes. Elena, is there anything else you wanted to add there?
Yeah, I totally agree with all that, and I would add it depends how you define risk. So if you're looking at a narrow definition of just leverage, yes, typically some certain hedge fund strategies will have a lot of leverage, but they will have that often on very liquid, which means instruments you can turn into cash very quickly, very diversified portfolios, and in a very tightly risk-controlled way. So they'll be very clear to hedge out market beta and factor exposure, and hence they can support that degree of leverage without it turning into an enhanced risk profile. If you compare that to something like venture capital, kind of at the other end of the spectrum, that's very liquid. So you put your money in and you won't get most of it back for at least 10 years, although hopefully you'll get many multiples of it. And most of those bad VC managers will lose all your capital, a lot of your capital. So most of the companies they invest in will go to zero or might end up being below cost, but the home runs they hit will more than make up for those losses. So that's a very different type of risk. Something like a buyout strategy or private equity, they also put a lot of leverage typically on companies that they own, but they have full control over them and they can make sure that's appropriate degree of leverage and that they might be hedging out some interest rate exposure. So it entirely depends on how you define risk.
Thank you. We also have another question here around private credit. Jasmine, Alex, are you able to share more on kind of what private credit is or private debt? How does that kind of compare to hedge funds? It's something that we're seeing a lot of kind of a rise in kind of the non-bank lending sector in the UK. Are you able to provide more detail on that?
Yeah, I would say it's a lot of time private credit investments are not necessarily in a hedge fund vehicle. I would say they tend to be in closed-end funds whereby in a way capital, so client money in a way is collected at a specific point in time and then invested or it could be in a way there would be a commitment for clients to commit, and then when the opportunity arises, that capital would be called. The private credit tends to be usually a long-only strategy because it's private. There's very limited opportunity to short, or maybe with a CDS, credit default swap, and it tends to be shorter term in nature compared to I would say bonds or investment grade or high yield corporate bonds.
Great, thanks. Okay, so I guess moving on to maybe routes into the hedge fund industry. I know we have some of you who are already university students, so I guess you've already kind of started along your journey maybe towards the hedge fund industry, but it's quite an important question. We hear a lot about investment banking and things like that, but how do you actually enter the hedge fund industry? Are there direct opportunities, or is it more nuanced? And the answer is kind of both. So unlike a career in law, there is no particular route. Many industry professionals have a background in finance or kind of a master's in business administration from a reputable institution, but there are so many roles available, whether it's kind of an investment role like sales, portfolio management, or a non-investment role like kind of legal and compliance, HR, and so on. There are kind of individuals with a whole range of different educational backgrounds and skill sets. So it is less common for people to enter the industry directly from school and university, particularly at a hedge fund management firm, because these firms tend to recruit people with past industry experience. So they may prefer someone who's already worked at an investment bank because they kind of consolidated their understanding of investment concepts and kind of gain that practical experience, or indeed experience at kind of a hedge fund service provider like a law firm, consultant, audit firm, and so on. But that said, there is kind of in this industry an importance on relevant kind of the transferable skills that you take away. So I know people that have studied kind of architecture at university and that they're a hedge fund manager. Someone began their career in hotel management, or even a degree in professional dance and theatre. So it's not to say that's definitely not the traditional route, but it's the skills that you take away. And there are so many roles in the industry. It really depends what you're trying to pursue. And there is that caveat that the importance placed on kind of your industry related backgrounds or the degree that you studied or university that you studied in, it really varies from firm to firm and per role. Elena, I understand you studied history at university. So how did this lead you to a career in alternatives?
Yeah, sure. So I chose to do what I really enjoyed at university, and I suppose the UK is somewhat lucky in allowing you to do that. It is not mandatory to have a degree in finance to go into the financial industry. I started at Goldman Sachs in investment banking. I did 2 years there and then moved over to the investment management side, to the fund of hedge funds portion, before finding the job at Wellcome. So through that journey, I sort of realized that I really enjoyed being part of the financial sector and seeing what made markets tick. But I didn't want to be a kind of trader myself. I wanted to take slightly longer term, or definitely longer term views and positions. And I enjoyed working in a multi-asset construct where you're comparing different types of manager and investment to each other and building a portfolio of them. So that's where I ended up where I am today.
And are there any particular skills that you found, through your history degree that you've been able to use maybe in your role today, or that have helped you?
Yeah, actually, even though it's not commonly thought of, I do think social sciences degrees are quite relevant for what we do, in that you're analysing, whether it's history or maybe geography, you're kind of taking a body of data and different pieces of evidence, kind of considering the bias that might be inherent in it, and then weighing all that evidence up to come to a conclusion that won't be certain, but will be a kind of best guess. So I think those kind of analytical skills, ability to construct a hypothesis and then defend your argument and take on new opinions as well, is very useful. I think if you are scared of numbers and you kind of balk at the idea of an Excel spreadsheet, then this probably isn't the industry for you, but you don't have to be by any means a maths kind of guru. I think a lot of the maths we use on a day-to-day basis is probably the equivalent of about year 7 maths. You can definitely get more complicated if you want to, but you don't need to do my sort of role.
So how did you kind of make that transition to kind of a more financy role? Like, did you have to do any additional qualifications and things to build your investment knowledge?
Yeah, so the investment banking program, typically for any bank, JP Morgan or Goldman Sachs or whatever, will train you up. And so I did I think it was about 6-week training program. And then you learn on the job. And there are various regulatory qualifications you do. And then since I joined Welcome, and I would recommend this once people kind of get a role, is I did the IMC, the investment management certificate, and then the CFA, which is a more intense process, but it is one that gives you more of a kind of theoretical grounding in investment management and the various instruments that we invest in.
Great, thank you. Jasmine, can you tell us a little bit about your journey into the industry?
Yeah, I would just very much second what Elena said on the quantitative point. I think that really puts a lot of people off. I started maths at GCSE, and I, investment manager at these kind of big companies. So you do need to understand numbers and not, as you say, shy away from them, but you don't need to be a maths whiz. Yeah, so I studied management and Spanish at university. I then did a couple of spring weeks or insight programs like this one across kind of some of the investment banks, also fast moving consumer goods company, which was a great experience. I really encourage people who think they want to go into finance or investment to try and get some experience at a business outside of the industry, to really have that contrast and to help you understand if this definitely is right for you. For me, it really confirmed what I wanted to do, but having the contrast was really important, I think, at that stage. Then did a summer internship at Deutsche Bank within that asset management division. I kind of didn't want to do the investment banking side of things. For me, that was too almost kind of project based, and then the opposite end of that, or the other extreme, to me seemed like sales and trading, which is sort of minute by minute, hour by hour. What I really liked about investment management is it kind of sits in the middle, where on a day-to-day basis you're following markets and you're kind of getting paid to understand what's going on in the world and the implications of that. But a lot of the relationships and some of the investments you're making are much longer term. So I think for me that was a nice contrast. I also found it a great experience having done internships or having some interactions with very large firms, because what that told me was I don't want to work for a very big organization. And I think one of the great things about maybe this subsector within investment, hedge funds do tend to be smaller businesses, both in terms of assets, but headcount as well. For me, I think culturally that was a much better fit. So I would say or suggest people have a think about that in terms of what's their kind of working style, who do they want to interact with. There's lots of good things about being part of a very large organization, often a great place to start your career, but it's a different dynamic in smaller firms. Sometimes it's incredibly frustrating because you don't have the same kind of resource, but from my personal experience, it allowed me to move up the industry a lot quicker because there's a lot less bureaucracy, generally speaking, in smaller firms.
And I know we've got a lot of university students at that stage where they're looking at investment as spring weeks and so on. Can you give any tips on what do you feel made your application successful, and how did you balance that with doing your degree and getting those applications in on time?
Yep. So definitely, I think quality over quantity. I think a lot of people try and fire off an application to every single kind of bank or investment house out there. There's no point if it's not going to be up to standard. So do as many as you can, but I think focus on getting the quality right. The biggest thing for me was having conversations with people sort of had been through the experience the year or 2 years before. So whether that's through like a sports club or society, talking to people was by far the most valuable resource. When you Google these things, kind of everyone has access to that information, so it's quite difficult to find nuanced or interesting information to help you stand out, whether that's at the application stage or in an interview. But by speaking to people who've maybe done an internship or a spring week there, or know someone that works there, or even have a grad job there, you get a much more detailed insight to what they're looking for, how the business works. And the other thing, and this is probably particular for interviews and cover letters, my rule always was, if you could swap out the name of the place that you're applying to with a different name, and the cover letter still makes sense, it's not tailored enough. I think it's really important to tailor and be very specific about why you're applying to that firm, what makes it of particular interest to you, because I'm sure you guys have heard this a lot, but from the HR or whoever's reading this application, they're reading a lot of these applications, and if their impression is that you've just copy and pasted, it's just not interesting to them. So yeah, that's my kind of test to myself. Cover up the name. If you can swap it and it still makes sense, you've got to make it more bespoke.
I would like to add, I've never done a summer internship or a spring internship, but I review the applications that come to JP Morgan. I review the video, the higher view, so the automated video that you record as well, and do some interviews. I would say definitely ahead of the preparation, like throughout the year, be curious. I'll give you an example. Recently, we had a batch for an internship program where there was a question on what was a remarkable event in the financial markets that you found interesting. And out of the 50 candidates, roughly, I had about 48 talk about the mini budget event that happened in September, and two very different but extremely interesting answers. One on the drivers of the price of eggs and an article that read about that, and the other one about M&A. And I found like the two definitely, I put them to the next steps. Really, so differentiate yourself from the rest by being more curious.
And just on this point, are there particular resources that you think, where can they get this useful information from, Alex? What kind of news sources should they be following, or kind of podcasts, things like that? Is there anything you recommend?
You mentioned podcasts. I love Odd Lots podcast from Bloomberg. I find it like probably one of the most entertaining one out there. Otherwise, there are tons of articles which are, Wall Street Journal, the Financial Times as well. If you are at the university, you probably have it, or subscription through the library. Don't read everything, but definitely a few articles from time to time help. And also, I would say, just really be sometimes aware of what's happening from an academic research standpoint. If you like research, you're at university, I regularly browse through SSRN, which is the public database of academic articles. And when you type finance, you can have sometimes interesting research articles or evidence that pop up.
I would add to that, there's tons and tons of like morning email summaries that kind of talk about what's gone in markets the day before. The best one I find that it's very detailed but digestible is John Authors at Bloomberg. He sends fantastic morning note, which Jonathan Ruffer describes as his morning porridge. He also is very good at referencing where he kind of finds his sources of information. So it's also a good kind of starting point to then pursue something further and be kind of curious, as Alex suggested.
Can add to the podcast list. I add Capital Allocators and Invest Like the Best, which probably both give the kind of maybe slightly longer term perspective, but we'll take big events or also do a deep dive on particular institutions. And then Planet Money. There you go. Yeah. Planet Money and Market Watch are other ones. I also have a short book list, well, actually quite a long book list, but I'll try and abridge it for people specifically on this industry. Black Edge is a good one on allegations of insider trading and how the SEC approached that. Liar's Poker Barbarians at the Gates, Big Short, and When Genius Failed on the LTCM crisis in 1998. And they all give a good and entertaining sense of different eras in this industry and some big personalities that came with it, but fortunately aren't always replicated in day-to-day life now.
And one great book I really enjoyed, I recommend it to everybody who wants to learn more about the hedge fund industry, is also Efficiently Inefficient. It's a relatively academic book, but it describes for each types of hedge fund strategy that exists, in a way, a more theoretical aspect behind it. And then there's an interview, a Q&A with big hedge fund managers doing that type of strategy. So it's interesting. And it's very easy to read, actually. Efficiently Inefficient.
Thanks. And I'm going to do a totally shameless plug and plug some AIMA resources. So we have a podcast, a long short podcast. And in that we speak to loads of people within the industry, and it's a weekly podcast going through, what's happening in the news and actually speaking to the fund managers, speaking to the regulators, speaking to, sometimes AIMA staff as well on what they're working on, and kind of, because we have the unique position being a trade association, is we get to see the kind of industry as a whole. So I work with or advocate on behalf of both the smaller hedge fund managers, the larger hedge fund managers, also the hedge fund service providers, and then the regulators, and also some investors as well. So we get to see what are their needs, and kind of in a more real-time basis, what's affecting them, what are their concerns, and then also in what direction is regulation heading. So we're hearing a lot about ESG, what rules are incoming and what's the impact on firms. So you do get that kind of raw commercial awareness through the podcast and also through speaking with AIMA staff. So do feel free to use us as you need. And we do have a careers guide as well. And at the back, we have a whole list of recommended reading, touching on kind of careers resources, technical resources to help you kind of understand the nitty-gritty, and so on. So they're all freely available, free to listen to. I get no benefit from that at all, but it's there for you to use. But yeah, so I guess moving. Alex, I don't know if we touched on what led you to a career in the alternative investment industry. I don't know if there was something you wanted to add on that.
Not, I mean, I would say I have a bit different background to Lena and Jasmine, in the sense that I studied finance, so and some theoretical aspects to portfolio management, and I had a bachelor in mathematics. That being said, actually, after my studies, I did not go into portfolio management. I went directly into the client side with the private bank at JP Morgan in Paris. And there I was really able to train some of my more client relationship skills, able to articulate an idea, which maybe for graduates is a bit hard. And it happened that 3 years later, when I moved to associate, there was a role in the hedge fund selection team. And I applied, and because of what I studied, I was able to have a foot in the door, despite spending 3 years with clients. I always liked the theoretical aspect of some of the hedge fund strategies, and so probably that helped me get the role internally.
Yeah, we had a question directed to you, Alex, because you mentioned that you hadn't done a spring week of internship, and your kind of tips you would give someone who hasn't received an internship to enter the industry. Is there anything that you wanted to add on that?
I would say curiosity, definitely. I mean, there's the aspect that Jasmine mentioned, try to talk to someone who are in the industry or did an internship a few years before, just to understand maybe what you missed during the internship. But also try to participate in these panels, or at least listen to these panels to understand directly from the practitioners, because then when you are able to apply for a role, you already have an understanding of what people expect from you. And I think by that, you already have maybe 2 to 6 months of training already ahead of some of the other candidates, which is, I think, is super important. And I know there was someone mentioned also something about courses, extra courses. I mean, the CFA is what I would recommend some of the graduates, but also I think coding, I see this more and more into junior role requirements, like Python typically is a language that is being used quite a lot in finance. And I know some of I'm looking around, some of the analysts on the team definitely know how to code. I understand, but I'm not a coder.
There's also a website called Coursera, which offers a lot of like some of the Ivy League schools in the US. They'll do modules or classes which you can basically do online. A lot of them for free. So if you're not doing a finance degree, but you kind of want to have some grounding principles, then Coursera might be an interesting place to go.
Great, thank you. So maybe moving on to where we think the industry is heading and the future of the industry. Jasmine, why is now an exciting time to join the industry? How do you see the industry developing?
Sure. I mean, we're obviously all outrageously biased, so maybe take what we say with a pinch of salt. But I do think, shock, it's a super interesting time for alternatives and for the hedge fund industry. Why? Because I guess for a really long time, kind of conventional portfolios, so just using bonds and equities, did really, really well. So like for the last 40 years, basically up until 2020, that type of conventional investment balanced portfolio delivered amazing returns. So wasn't that you didn't need alternatives, but it was kind of good enough not to have them. But that was all in kind of an environment where we had very low inflation and very low interest rates. And for anyone that's kind of been reading the news or following markets, we're in a pretty different world now. And arguably the huge debate, the kind of $1 trillion debate is that an environment that prevails? So are we going into a different kind of investment environment for the next few years or decades where inflation is kind of a problem again? Maybe there's more volatility, interest rates aren't going to be very, very low. Or kind of the other side of the debate is, do we go back to this kind of low, stable investment and interest rate regime? We would argue that we're in quite a different environment today. And I think a lot of investors, wealth managers, financial advisors, endowments, other big asset allocators, understand this debate. And I think whichever side you fall on it, generally speaking, investors are looking to at least have something in portfolios that can deal with a more volatile and perhaps more challenging environment. And typically, or often that is alternatives and hedge funds who have more investment flexibility, kind of a wider toolkit, can use more complex instruments. And I think it's going to be a growing part of investment portfolios where if traditionally it was 60-40, 60% equities, 40% in bonds, who knows, maybe in 10 years time, that looks like very different split where we have sort of a much bigger chunk in alternatives and maybe there's a 20% feature in that. And so I think as a slice of the overall investment landscape, alternatives and hedge funds are going to be more appealing to a wider group of people, and that's really a function of the investment environment that I think we're now in and could be for some time.
Elena, Alex, would you agree? Is this what you're also seeing with your clients?
Yeah, so I would attest that I'm actually not biased in the sense that we can invest in anything, and I'm incentivized for the whole portfolios rather than specifically my hedge fund piece. All that said, I'd agree with much of what Jasmine said in terms of it's been a great bull market to invest in things like public equities and venture. The environment's getting a lot trickier now. And there is good reason to believe that managers who have more tools in their toolkit and can use more instruments to navigate these markets and potentially benefit from volatility should do well in this environment. All that said, I think it's important to state the obvious, which is that most investors have going long in public equities, whether via passive or active managers, as a kind of cost of capital alternative, and certainly going passive is a much, much cheaper alternative than some of these hedge funds, which charge actually quite extortionate fees, but often the best of them. And there's some questions on the direction of travel. The industry in hedge funds is consolidating into some multi-PM platforms, very, very large hedge funds that sometimes manage 40, $50 billion of capital, have lots of individual risk takers within that. So I think that they have demonstrated their ability so far to be able to actually compete and outperform public markets in lots of different challenging environments on a net basis. So all very well and good, but investors won't tolerate prolonged periods of underperformance, and that's why this kind of asset class constantly needs to be proving itself and on its toes.
Not much to add from my side. I agree with both Elena and Yasmin.
Great, thank you. So I guess the students here want to know how they can a final point. I can see Vicky coming back online. Just one more question. So for our students who are looking to be a part of this future industry, you know, are there more direct opportunities available for these graduates? Are there kind of more schemes that students can be getting involved in? Alex, as a kind of the person reviewing some of these applications, what are you seeing?
Definitely, I would say there are a lot of graduate programs. I mean, I think when you think about summer internship, for example, or graduate programs, like big banks usually tend to come up first in terms of, I would say, like presence of mind for students. But there are tons of opportunities, tons of great firms out there, which are more boutiques, maybe like Ruffers is one of them, where you can learn a lot, maybe even more than a big bank actually, because you, as you say, there's maybe you have more flexibility or more opportunity to do everything. But also, I think if there's an aspect of financial markets maybe you find interesting, you could join a different type of role, whether it's on the sustainability space or maybe on the I would say on the marketing or on the sales side there, and actually parallel, like do some self-learning, like the CFA, for example, let's say. And I've seen many times where there's been lateral moves from people within firms to more investment role, if this is what you want in the end. So I would say it's not because you didn't get a summer or spring internship that career path is over. I mean, far from it.
Yeah, and you know, kind of looking at the skill sets and the types of roles that are particularly coming into demand at the moment since COVID. A lot of software developers, quantitative analysts. We're seeing a lot of increased hiring of the people with those skill sets. Also, there's with the investor demand for more ESG products and kind of increased regulatory pressures. Firms are looking for more ESG specialists as well, which sucks for me because I hated geography at university, and I'm guessing you need some kind of love of geography to enjoy ESG. But yeah, with that, I'll hand over to Vicky. Thank you so much from me and from our speakers for taking the time to listen to us today. And thank you, speakers, for sharing your journeys and experience. Hopefully, you've all found something useful from today. And if you do have any questions, feel free to share these with us afterwards. Vicky, I'll hand back to you.
Thank you very much, Anika. Thank you so much to our speakers. It's so clear that this is a very lively, interesting conversation. I don't think we've ever had so many questions before. Thank you for making your way through as many of them as you were able to. Thank you to everyone who's attended this session for being so engaged and interactive and asking questions and wanting to find out more. Really appreciate you all. You know, you can find us, we've mentioned, I've heard lots of talk about programs, and hopefully you're all aware about our Insight programs, which is for first year and second year on a 4-year course students, and then our internship programs, which is in summer, which are for undergraduate and for penultimate and final year undergraduate or postgraduate students. If you haven't, and for anything else for these events, so just so you find out more, like self-learning is so important, so please do see what we've got coming up. It's www.gainuk.org. You can find us on social media. We're on Instagram at Girls Are Investors, and on Twitter just Are Investors. Hope to see you all back. Thank you again to our wonderful speakers. You're all welcome back whenever you'd like to join us. I think Jasmine, you're on something else very soon, so please find out what she's doing and attend. And thank you. Have a lovely evening. Thank you all. Thank you, Anika, again for moderating.
Thank you all.
Thank you very much. Take care.
Bye.
Bye-bye.
Bye.